Good morning, traders. It's Friday, February 14th. Happy Valentine's Day. Taking a look at the charts, we got the SP 500 up a little bit this morning, up about a quarter of a percent. The markets continue to rally. No matter what kind of bad news keeps hitting the market, like we saw yesterday, stocks are really this past week. We've seen the stock market hit and down a couple of mornings, and they just recover and close fairly strong on the session. Today we are back above this 5-day moving average, or well, actually we haven't broken it yet. We continue to dip below it, rally back above it, and the market just continues to grind up, just like we saw over here. The market can stay above this 5-day moving average for extended periods of time. If we zoom out here, you can see how long it can just stay, and it feels like the market's going to drop at any point, but it can just keep on grinding its way higher until we start to see some type of bigger cycle to the downside. So overall, trend continues up. Actually, today looks like it's going to be a fairly decent day. Metals are up a little bit, miners are up, bonds are up, stocks are up. So all of our positions are actually set to open higher today. And we'll see how the day closes out going forward. Let's take a look over at bonds. Bonds up a quarter of a percent. You can see they continue to form this nice pennant formation, which is seen as a continuation pattern. The price should break to the upside and resolve to the upside, and that's doing fairly well. Utilities actually had a really big pop. I missed that yesterday. They had a big pop yesterday to the upside, which is a sign that there's money moving into the safe havens, or at least this safe haven. It has formed a nice bull flag. It's kind of breaking out and popping. We'll see how that holds up. But overall, utilities have been performing very well. And at this point, you've got a strong rally, you've got a consolidation. At this point, if this is the halfway mark, which is what a bull flag usually is, that means we could see utilities really continue to climb much higher. Let's just take a look at the big picture here. You can see the big rally they've had. So obviously they're just on a tear. I do feel like they're getting a little overdone, but I mean, we can't really fight the trend. I feel as though the type of pop that we've seen, we could see it kind of fizzle back down, because I feel as though we're about to see a big wave of money continue to push into the equities market, and they're going to go more into the risk on, not so much into the risk off, which is utilities, bonds. So we'll see how things unfold, but overall we're long the equities, and on average they are working their way higher. Looking over at gold, gold relatively flat on the session. Silver's up a third of a percent. Let's take a look at silver. Silver up a little bit. Again, still flagging out. And if we look at gold miners, yesterday they traded a little bit higher. Today they're set to open slightly higher, but really still underneath this previous pivot high. We'll see what kind of action we get. But again, it's got a nice rally, a nice bull flag or a pennant formation. Should resolve to the upside. We'll see how things go. Keep in mind, though, this is a bull flag in the market, meaning a lot of times what the market will do, it'll start to sell down and you'll see a quick hook to the downside, and then you'll see a very strong reversal. There's a lot of people who see this pattern, and when there's a really crystal clear pattern in the charts, typically the market is going to try and fake everyone out, meaning it's going to break to the downside, and when it breaks this low and this low, everyone's going to get flushed out. They're going to have their stops triggered. A lot of people have their stops set under here and under here. And of course, as soon as those levels break, we'll see a surge of volume. We'll see a sharp drop because of the flood of sell orders. And then the market will reverse and take off in the other direction. This happens quite often with really clear patterns that a lot of people are following. So that's why our stop is set quite a bit lower. We need room for the market to shake things up and try and squeeze the average market participant out before it finds that true bottom and then takes off. Let's look over at let's take a look over at natural gas. It's down a little bit this morning. Overall, it's still flirting with this 5-day moving average. We are getting pretty good volume. I feel like a bottom's trying to carve itself out here, but it just hasn't found any real legs. It needs to break this high, it needs to break this high, and this high. If it can start to get there, even if it does get that high, we're still stuck under the 20-day moving average. So there's a lot of work to do here. I do feel as though it could very easily be one of those knee-jerk reactions where we could see it just explode to the upside, and it really doesn't give us an opportunity. But not looking to really stick our neck out and try and pick a bottom on that again. That was a small position. We stuck our neck out, and it didn't work out. And that's the problem with trying to pick a top or a bottom. Trends are more likely to continue than they are to reverse. So it does put the odds against us a little bit more than normal by trying to pick a top or a bottom. Crude oil up 1.63%. It is right up near the upper end of this range here. It is threatening to break out from this high. You can see it's testing that level this morning. Overall, this high down to this low, this is the range it's in. If it starts to break here, we could very quickly see it go up to this 55.50 area, which is the 20-day moving average. And more or less, it would probably be a measured move. Let's just grab a box. If we take the distance from this low to this high, and then you take that to this breakout zone, it would bring us pretty much to this blue line, which this blue line is a long-term resistance area going way back on the chart. And it would also be the 20-day moving average will be moving into this as well if we see a quick pop in the next 2 or 3 days. So the next upside target is around that 55.20 area where it'll run into resistance. So the power from this high to this low, if it breaks, we could very easily see it quickly pop to that level and then run into some resistance. Could go much higher, but overall, that's the quick initial momentum move. It should move to that distance if it breaks. Last but not least, here's the VIX. We haven't looked at it in a little while. Overall, the VIX is still trading up a little bit here. It still has room to fall and to chop down in this lower range. So overall, the fact that the VIX is still up here, 13, 14 range, tells me that I think we could see the equities market continue to rally. The VIX could fall and fade for another couple of weeks potentially, and that means higher stock market prices. And once it gets down to into this 12 to 13 level, then we'll start paying a little more attention to a potential market top starting to brew. But overall, we've already had a big spook of fear. Everyone got shaken up out of the market, and now it's fading back down. And until it gets down to this range, I'm not too concerned about a sharp drop in the equities market. The trend is more likely to continue than it is to reverse and sell off. Obviously, the virus news is starting to keeps rolling and growing and trying to play a role. I think I mentioned this in an interview with House Street Radio a week or so ago that depending on how long this virus keeps factories out of work, it's going to definitely kick in down the road. It hasn't really affected the stock market yet. It hits the market early in the morning and overnight trading, but buyers keep coming in and buying the stock market up. I think if this does start to get a lot worse really quickly here, which I think there's a lot of potential for that, I think it'll definitely pull on the market and affect companies and earnings down the road, but it'll be very delayed. So I'm not too concerned about it just yet. At this point, dips in the market are being bought, and there is some growing fear. We are seeing metals and bonds move up as well. They're holding their ground. So money continues to move into all the markets as fear rises, but people are still bullish and they're buying stocks as well. Anyways, that's it for now. Talk to you in a bit. Bye-bye.